sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm just going to be going over some Bitcoin updates, but go ahead and get started here. The first thing I wanted to go over is this fear and greed index chart that I found for Bitcoin. I haven't been able to find one that goes back any further than this, but nonetheless there is a picture here that I would like to paint clearly with these three boxes I have drawn in here each time, just going back and kind of looking at this and analyzing it. Once we start to hit around 50, 60, push in the mid 60s of the fear and greed index, so the rating system, it basically has insinuated the next bull run, or at the very least a relief rally, which would be in the case of going back here to 2019 when we went from around just approximately 3,500 to approximately 13,000 for this relief rally of what would be the phase one of the current cycle 3 that we're on. We did the same thing after our March crash. You can see lowest we had score 9. We started slowly moving up. Now we're at 19, 24, 26. We get to here, start getting to 40, 39. But when we get up to here and we made this first relative local high at approximately 10,000, specifically 9.7 thousand, we for the first time hit 50 in the 5th month of 2020. And then we continue just to push higher. Eventually we hit the 80s, high 70s right here for this second local top in the 8th month of 2020. Once more again, I believe that we are basically circling this area right here. And then right here, we are essentially, just to reiterate for you that are already familiar with the content, you're well aware that that is essentially where I believe we are if you were to look at the price in terms of a fractal nature, and analyzing it that way in terms of the cycles and things along that nature, which would mean that if this is correct, we are basically, to go back here, right here in this area, and this kind of, maybe we'll sit here and we'll consolidate for a little bit, but then eventually we'll just basically have a straight upward shot like that, according to the previous bull run, because we are in what would be considered the overall the third, given we are in the third cycle, the third super phase or super cycle. Technically would be a super phase according to my system. If anybody's new to the content and you want to check out more in depth what I mean by this, the first card, the first two cards of the videos, or this video will have me going in depth what I mean by that. But for the overall charts that I want to go on in this video, I'm only going to go over 3 Bitcoin charts, 2 monthlies and a daily, although these 2 monthly charts are going to be very, very profound in what I'm going to go over on them. So what we can see on here clearly is the vector candles I've been using for quite a period of time. We see our turquoise and our pinks and our greens and our reds, and can't really see any purples on here. Our March crash candle right here is a purple, but for the most part, turquoise, pink, red, and green are what we're seeing. This is a new indicator that we can see down here with the red bubbles, black, turquoise, and pink lines. This is a volume. The name of it is volume price average range. And you can clearly see, obviously, we have our low range down here denoted by the lowermost 2 dotted lines. We have kind of this golden trend line, which is why I have it yellow. Once we really start to break that, getting the 3 of these lines you see on here above that essentially means bull run confirmation, which further lines up with these small areas I have right here denoted by the black vertical trend lines, or these 4 bars. You can clearly see each time, if you take it up to the price, see each time it's lining up with the basically 4 monthly build-up candles leading into the brunt of the upcoming bull run according to that. And then down here, each of these red bubbles specifically denote shortly after we get all 3 of these lines on this indicator to go above the yellow trend line at the value of 45. And what I'm specifically pointing out by each of these 4 red bubbles on here is You can see obviously the black breaks above both of them, meaning the pink and the turquoise lines, and then comes down and makes this retest about right in the middle, the median of the distance from the pink all the way up to the turquoise. You can see going back to this one right here in 2012 did the same thing as it did right here in 2016. If we go to 2020, basically during or shortly after the March crash, leading into the $64,000 high up here, this is what lines up, comparing this one right here in 2020, this is what lines up with the analysis I've been going over recently and what I just got done going over that fear and greed index chart, basically saying that I believe if you were to look back in current history, obviously things aren't going to be precisely the same looking back at history, but it will be very similar. It will rhyme to a degree. After all, history, in terms of the actual progression of human history over time, societal history, civilizational history, it doesn't repeat exactly, but it rhymes, and it has certain cyclical periods where very eerily, things happen in an eerily consistent flow of time. But basically, we are, I believe, just around August to September. So basically, I believe we are, again, just to point it out on this chart, we're right here, and we'll be leading up into this next move right here to finish off what would be this current cycles 3 super phase or super cycle. Again, this doesn't really matter, but technically, according to the way I look at it, would be that super labeled as a super phase instead of a super cycle, which the second one would be the one back here in 2013 or near end 2012 to 2013. But to go back down to this indicator again, if we look at where we are currently, you can see that we aren't about halfway according to the length, the vertical length from this turquoise or from this pink up to the turquoise. If we end up doing the same thing, then right now us being a rough value of 66 would come down to around 57, so it would just lose basically about 10 points, or more specifically, I mean, obviously it's going to be 0.10 instead of 10, but you get the idea. So whether or not that happens or not is still pretty a pretty clear trend here. I mean, it clearly goes all the way back to 2012, so this is nothing just to scoff at. This Fibonacci trend, or Fibonacci tool I have on here, I've already gone over, but again, just to show this is the Fibonacci tool taken from the very beginning, the inception of Bitcoin, up to the top of its first cycle, up to around $32. And you can see that the entirety of our current cycle, so starting from 2017 to our current time, that begins cycle 3 up to where we are currently, is about just roughly halfway into, a little bit past halfway into the cycle 3 that we're in. But you can see pretty much this entire time we consolidated within the golden pocket of this most macro Fibonacci, in my opinion, tool that you could take. My personal golden pocket is from the 1.618 down to the 1.444, with the 1.5, 1.4541, 1.577 being the intermediaries of that, which again, just to state, the 577 and 541 are prime numbers, so the numbers I'm using aren't just random numbers. I'm using them for a specific reason, because prime numbers are also just very important when it comes to a mathematical view of them. But again, I wanted to just point out how you can see right here, we just oscillated within it, broke above it, came down, and we tested the upper range of the golden pocket, coming down to, as you can see, just a wick shy of the 1.577 when we hit basically just approximately 15.5 thousand. We just, for about, let's see, August of 2022 to March of this year, got held below the 1.618. You can see now recently with our turquoise vector candle that we printed, which historically this indicates the beginning of the bull market. Obviously, technically, according to the way I view it, and if a lot of the people that are saying a bull market is upcoming, technically, obviously, the bull market began December to January. So December of 2022 to January 2023 would have been the absolute low of the current phase we're in, leading into, again, this upcoming bull run. But our current candle, once more, we are completely closed above it, and it is lining up with basically $24,000 approximately. If we were to wick a little bit lower than that, we could possibly go down to 23,000, maybe even 22.5 thousand. But again, that is lining up with my lower time frame projections. If we were to actually continue to go lower here, we don't necessarily need to go lower. For all intents and purposes, we could have already found our local low, and we could continue to basically trade sideways for the next about 10, 15, 20 days. Our current monthly candle only has 10 days left on it. So I mean, we could, like I said, just for all intents and purposes, we could trade sideways within the rough local bottom range we've set right now, which is around, I think, at lowest maybe like 27.5 thousand to my bad, no, 26.5 thousand to 27,000, I forget, but it's somewhere within that general range. But the last thing I wanted to go over again is a fear and greed index indicator here, and this one also comes with vector candles in order to denote the overall momentum flipping of the bull markets. This one's actually very nice. You can clearly see that this has been very accurate, going all the way back to after the first cycle. Obviously, we came into this bear market, so this what would line up with this bear market we recently had leading into 2019, and then leading into the March crash. We saw a double bottom back here. We had the first bottom in 2011, and then obviously this, it clearly just went sideways, but essentially look at it as a double bottom right here. We had a first bottom again November 11, and then March of 2012. Then we continue to go up here. We see our red candles. Once the fear and greed indicator flipped, we got green all the way up into here, flipped red again, flipped green, perfect timing, red, green, perfect timing into this relief rally, and then green, red, green. You clearly see each time, very, very accurate, about as accurate as you could possibly wish for overall to find in really any indicator. But that is also just another nice tool that I actually just stumbled across maybe like 15-20 minutes ago when I was pulling up that other fear and greed index chart that I went over. So if anybody would want to use that, I would definitely recommend that, because it's also, and clearly a very good tool to use as well. And then just to go ahead and show it for this indicator down here, these are the specific inputs that I'm using for this one. Again, this is the monthly time frame, 9, 4, and 4 for the, so slow MA periods 9, fast MA period 4, and then EMVA length is 4 as well, in order to get how it specifically looks down here, if anybody's interested in using that. Again, just to, and I'm going to actually, this is actually going to be a big update for this video. As I've been saying for quite some time, I've just been broadly projecting a upcoming high range of 200 to 300,000. And this entire time I really never saw 300k as being super realistic. I just gave 200 to 300,000 as just a broad range to encompass the most likely area that the upcoming high would encompass. But at this point, I have finally just come to the conclusion that I'm going to, as it's depicted right here, I'm just going to go ahead and zoom in. As it is depicted right here, I believe we're not going to get, and we may as well could just get a double top similar to what we did last time. But I think now, personally, I'm leaning to, we'll have a first top and then a second top, and the second top is going to be lower rather than being higher like I've been typically projecting it up until a few days ago. But I do think that the next high, just to give a little bit more specific projection, and this will be more elaborated on in the next chart I go over, but around approximately 225,000, and the second top will be approximately 180,000. First top, December, January, so December of this year, January of next year, and the second top is around June, July, August of next year. But let's see, so for this monthly chart, this is the big update that I wanted to go over in this video, and has to do with the thumbnail that I use for this video, denoting the fractal landscape in terms of Fibonacci tools. Obviously, in the previous chart, I went over this most macro Fibonacci tool that I believe is the most reliable one to use going all the way back to the first cycle. So this chart went over the first cycle's Fibonacci tool that I would use, and then this one right here starts at the top of cycle 1, so that $32 like I said, and then down to the bottom of the W of the phase 1 in that cycle 1 at approximately $2. So you can clearly see each time, and I'll go over the ones I don't have clearly denoted these boxes first, but you can see down here this 0.5 to the 0.618, so the golden pocket range or zone that I use. Once the price finally started to close with strength, volume support, etc. above that bull market, go to 2014 to 2015, you see the same golden pocket right here from top of the super phase or super cycle top, approximately 1200 down to this bottom at approximately $170. You can see right here, go and get the highlighter out. Actually, I'll just draw it over this one real quick. You can see once we broke above this, bull market began. Once we broke above this one, we even had a retest right here in around August of 2016. Bull market began. We do the same thing right here, top to bottom, golden pocket zone right here. After the March crash, we came up. We even had a, like I said, we have right here August to September, which is, like I said, not too long ago. I believe this is, if you were to compare it back to previous history, that's where we are basically right now. You can see we began the bull market. So those two right there I wanted to go over really quickly, but the main aspect of this chart is these ones that I have more clearly denoted with the boxes going out over a period of time. You can see right here from top to bottom of the W of the cycle 2 of phase 1, you can see that our super cycle wicked all the way up to the 2.93, but I have the 2.93 to the 2.382 as a range set because you'll see clearly, and I'm sure most of you can already see the pattern that I'm painting here. But once again, every number that I'm using is either already associated with the Fibonacci tools, or as another Fibonacci number, or as either a prime number. So I'm not just picking out whatever number lies and just happen to line up with wherever the wick went to. I'm using specifically mathematically solid numbers, whether Fibonacci number or prime number. So we can see right here again, we have our top right here, and we come up and we make our top right here. This is with respect to the Fibonacci retracement from 1500 approximately, or my bad, approximately 1200 all the way down to the approximately 170. You can see at the same area for 2017's high, approximately 20,000. We came down and we bottomed out right here at this area, the 1.618 to the 1.5, so the next iteration up of the golden pocket. You can see if we go back down here quickly, that's what we did. And each of these green bubbles I have on here is specifically denoting when we see the, so this is the yellow, I believe. Actually, let me just go ahead and quickly figure out like specifically what they are. So the yellow is the 5 estimated moving average, and the red is the 13 estimated moving average. You can see each time we have this crossover. So right here, right, so I'll give out the date, November 2015, May of 2019, and then we haven't done it just yet, but you can clearly see we're very close. All 3 of the moving averages on here are essentially converging, which that just at the very least means something big is about to happen. Either we're going to get a massive dump or we're going to get a massive pump. Everything else is really pointing to the fact that we're going to get a massive pump. Also, just to further validate that, you can see right here when the yellow goes below the red, back here was October of 2014, and we have October of 2018. So that's also a 4-year difference right there. We see that going back with all 4-year cycles and everything. And then we go out here to April of 2022. It insinuates the most massive period, as we can see here as I take this on and off. You can see this is what starts the printing of the pink vector candles you can see on here. And then once we finally get, as you can tell, the yellow back above the red, that is essentially when the bull market began, with the exception of our March crash. But I personally wouldn't even consider that necessarily an exception. This technically had to happen according to the inherent harmonic structure of Bitcoin's price patterning over time, which again has to do with the cards linked at the beginning of this video. If you want a more in-depth overview and you haven't already been familiarized with what I'm talking about here. So again, like I said, I wouldn't necessarily really consider that an exception. And also, the moving average didn't cross back below that as well. Basically just the 5 estimated moving average retested the 13 estimated moving average. So the yellow retested the red and found a bounce there into the $64,000 to $69,000 high. But again, that basically what I just got done going over, those moving averages line up with each of these green bubbles on here. And also you can see here that we topped out for our current one. The most previous double top right here from 64 to 69,000. We hit the 1.618 to the 1.5 golden pocket range. Again, once more of the retracement according to our bear market of the previous W to the bottom of the phase 1 that we are in. That is again also exactly what happened back here. We had this massive wick up to the pink, but essentially, clearly, as I've got done going over many times on the channel, exact same thing is just continuing to happen over and over again. Each of these, as you probably already could tell, vertical dotted lines are the halvings. So far projected all the way out to November of 2032. That's also another big update. As I went over, I don't know if it was the last video or just one, it was just one of the last like 3 videos, but I give a 4 to 5 year date range for the, so not the upcoming high from around 200 to 250,000, which is where I'm adjusting it to now, is what's more likely to happen in my opinion. So I'm throwing out the whole possibly up to 300,000. I at this point just think it's going to be 200 to 250,000, and worst case scenario it only goes to like 150 to 200,000, but I think 200 to 250,000 is most likely. And the 4 to 5 year range that I was giving was 2028, so going up to this high up here when Bitcoin reaches approximately 1.3 to 1.4 million, just a million in general, as a lot of people have been, prominent people have been projecting towards the end of this decade. I said 2028 to 2032, but I did some time analysis and some ratioing of going back to 2013, November 2013 to January 2018, so encompassing from this dot right here to this dot. So this would be the phase 2 of the previous cycle 2. Again, we're on cycle 3. We're about to come up and we're going to make, so I'm just going to go and connect it. We're going to make this top right here, which is going to connect to this top right here. Once we make that top and we enter this bear market, which you can, as I have denoted right here, connects with this bear market right here. So these two connect right here. But once we end up falling through this bear market, assuming I'm at least to a degree accurate, we will then connect these two highs right here. So this high going back to 2018, 2017 will be synonymous with that upcoming high that I just connected it to. So if we do end up falling through this again once more, at least is partially accurate, according to this adjusted time range that I set out, according to those ratios I just got done talking about, this is currently putting this high more towards the first half of 2033, which is a year later than the latest date I gave of 2032. Still, in general, I'm just going to hold it to that 4 to 5 year range, so 2028 to 2033. And then obviously as time progresses, and assuming I'm correct, or like I said, at least to some degree correct in my projections, then the, let's say, you know, the candles end up, so Bitcoin ends up going up and falling through nearly exactly accurately, just approximately accurate to leading up to approximately 220 to 230,000, lining up with this 2.293 to 2.382, which going all the way back to 2013, 2017, the absolute tops of the phases, so phase 1 and phase 2 have lined up with every single time, assuming that it ends up playing out as it has so far every other time. We enter this bear market, which could last all the way to 2028, and then basically would set its first bottom in 2026. So if this is accurate, like I've been saying, once we finish this upcoming parabolic move and we enter the next bear market after this, this is going to be the most brutal bear market that Bitcoin will ever or has experienced so far. Again, let's see, if we just go back to the one of 2011, this one was only basically 10 bars. This next one was 20 to 21, so double basically. This one was 15 to 16. If you take it to the March crash, it was around 27. So obviously still essentially worse than this one back here. If you just take it from just December of 2017 to March of 2019, it essentially wasn't as worse, but pretty much the same. Our current one, if you take it from April 2021, which on-chain metrics and plenty of other things validate the $64,000 top as the more kind of structural top rather than the 69,000, which you could also just justify that by the fact that we had a double top of a bearish divergence. But this bear market lasted 20 bars, so that was essentially the same as this one back here of 2013 to 2015, which again, like I've said, just to reiterate it real quick, the structure of this bear market we've seen currently is essentially identical to the bear market we saw from December of 2013 to September of 2015. So like I said, longest bear market so far has been 21 bars. If what I'm saying upcoming is accurate, then this next bear market is going to be 50, we'll just say 50 to 55 bars long. So it's going to be a little over double the length of any bear market that the Bitcoin has ever experienced. So I mean, it's going to be insanely brutal. I would say, let's say that this ends up not lasting as long as I've updated it in this video. I mean, I would say at least it's going to have to, the length of this upcoming bear market will at least roughly double. So I mean, we're still looking at around a 40 length bar bear market, which is still obviously the worst one it's had so far. It would more likely end around May of 2027, with the overall bottom range probably lasting about, if I had to guess, probably 20 bars. So the actual dumping of the bear market would be about 20 bars, and then the bear bottom range, which as you can see is going sideways up here, and again is just correlated to what we saw back here in 14 to 15, will last also about 20 bars. It will most likely just in general meet this golden pocket range that I have right here, as we did going back right here, as I've clearly drawn out. We will also see two halvings within this as well. We'll see an initial one of whatever happens, whatever month it happens in 2028. Right now I have it lined up with on July, which would line up with this, my next projection of this green bubble, which is projecting the next crossing above of the 5 EMA above the 13 EMA. So the yellow moving average above the red moving average happening also in at least approximate unison with what would be the 5th halving overall for Bitcoin in its history. And then the 6th halving would just line up with basically the last final moments of the upcoming phase 2 of cycle 3's bull run, and around whatever whatever month it would happen in the year of 2032. So the last thing that I wanted to go over for this chart was this 3.321 that you can see right here. If I go ahead and just get the highlighter and draw it out real quick, you can see that it is essentially, it's synonymous with the 2.382 to the 2.93. So this 3.321 right here, which is of the retracement taken from 2011 to 2012, is synonymous with the, like I said, 2.382 to 2.93 of the retracement, or my bad, the Fibonacci retracement tool taken from approximately 1200 to approximately 170 of 2014 to 2015's bear market, which you can clearly see as I was highlighting. This is what lines up with the phase 2 high of the previous cycle 2 we were on. So that is again just why I have this fractal pattern out here going to broadly 1.3 to 1.4 million, because that is what the Fibonacci tools call for, and according to the fractal structure of Bitcoin cycles in the phases within over its period of time. But that was, I believe, everything that I wanted to go over in this chart. So the last chart that I wanted to go over here is this daily chart. Again, just to quickly reiterate, we have broken out of a curvilinear or linear falling wedge. We found a retest in support of the 16-month resistance, and either whether or not we end up falling through this white fractal pattern right here and we come down a little bit lower and more accurately meet the 0.618 of this retracement that I have right here, also meeting the median retracement zone of what I've been saying that this pattern is. So this bullish megaphone pattern basically that we see right here, consolidating. We've seen a breakout. So you could kind of look at this as kind of like a fake out in a way, but we're going to come down and we've already had somewhat of a retest. Maybe we'll even have a further retest, and then after that we'll just basically skyrocket towards the upside in accordance to my projections. But if I zoom in here, what I want to show is a lot of people I've been seeing recently have been basically drawing a bull flag with this right here, this upwards movement being the flag, this right here being the flag consolidation. So whether or not we stay right here in this zone, maybe we even continue to go sideways a little bit, or whether or not we have this fake out of the flag and then we slowly build our ways back up to it, who knows at this point really what is going to happen. Like I said, either we will stay consolidating within this range. So far we have wicked down to 25.8 thousand. So I mean, if we do come down, and we could come down to that again and still stay within this flag range that people have been pointing out, as I've been seeing, like on Twitter and other places, for example. But if we do get this fake out, it would be similar. Like I said, we'll meet this golden pocket more so, this bullish megaphone retracement range. But it will also, as you can see here, have us drop below this white moving average, so the 50 estimated moving average right here, in a similar fashion that we did back here for this downside going into about halfway into March, which also generally just kind of correlates with the structure of price right here. You can see that we lost the band right here of the 50 estimated moving average, had the dump, and that's basically likely what we're seeing right here. We've already lost it. We are not really regaining anything above the 5 estimated moving average, so this red moving average right here, so likely, my opinion, at this point, I think it is 50-50 whether or not we continue to go down. I mean, if we do go down at this point, it's only going to be, I think, another like 15%, unless we do end up testing like 20,000, like I said, or that bearish inverse bullish megaphone that could take us down to 12 to 10,000 I point out in the last video. Although, like I said, I don't believe that is what's most likely whatsoever. I think this white pattern right here is what is most likely, my personal opinion. Once we do finally break out above, basically right now 27 to 28,000 is very important. We need to start, once we start to see volume support, just overall price strength and etc. above that, which is also what is lining up with basically where the 50 estimated moving average in this band and this 800 estimated moving average, so this dark blue or purple moving average, which are two very important ones right now, is where they're flat-lined on at this point. So, and the band spans basically from 27 to 28,000, like I said. So again, 27 to 28,000 is very important to start to see strength above right now. And then obviously the full-on confirmation would be seeing strength above 30 to 31,000. And if this projection is at least accurately, approximately correct to this fractal pattern right here, again, this is on the daily, we will basically just see a straight upward shot into the next all-time high. If we don't end up seeing that, this straight upward shot, I think will eventually come up. Maybe it will either consolidate a little bit longer in here, and then we'll finally shoot up. Either we will take this kind of general, this more simplified blue path like I just drew, or this more precise white pattern. But I do find it interesting that this white pattern does find this, once we come up to our top right here at approximately 220 to 230,000, towards the end of this year, perhaps very beginning of next year, we'd come down and we would retest for this this relative local low at around 90 to 100,000 right here. Then we'd come up and we'd make this second top, like I said, at around $175,000 approximately, and then we would come back down. And then I just find it funny, or interesting at least, that it tests the resistance that we've been seeing all the way going back to the very beginning of this year of this bullish megaphone pattern that I have been pointing out. But I believe that was mostly all that I want to go over here quickly. I'm just going to take a look at this RSI here on the daily real quick, just to kind of point out a few things on it. probably the MACD in the stock as well. So if we take a look here at the, again, this is the daily chart. So we've been basically straight up going sideways. Very boring. It's been very boring recently. But you can see the RSI is tilted up. I mean, you could say that there's at least a I forget the specific terminology for it, exaggerated bullish divergence, or just sometimes I refer to it as just a subtle, and by subtle I mean you could put a grain of salt to it, or realistically you could say there's not really one here at all, but there could perhaps be some sort of positive divergence here. See, the RSI is essentially, or the stock RSI rather, is doing essentially the same thing. We have come down and we've made a nice, you can see how we've came down, made a double bottom with an M in between, like I like to point out, in terms of just fundamental price harmonics, with W's and M's being basically intrinsic patterns to all markets at this point. And then also the MACD is doing the same thing as well. You can see we are coming up and we're testing the 0 point, which is very important to flip in order to get some momentum thrust towards the upside. But also at the end of the day, I mean, we could come up here, we could test like basically 29,000 again, or something like this, come back down right here and then go up. Or I mean, we could come back up, come down and do something like this, and then finally come back up into here and then go up like that. I mean, like I say, at the end of the day, I could draw so many patterns, an infinite amount of patterns on here. Who knows which really one, which one will be taken at the end of the day. That is the whole, I suppose that's just the name of the game. But let's see, if I were to draw a trend line on here for an RSI trend, let's see if we do something like this. You can see that we are testing this daily RSI trend. I had a range here encompassing both. We can see we're testing this, goes all the way back to around halfway into April. So at this point, it's about a little over a month RSI trend right here. So this is looking very promising at this point. Although still at the end of the day, I'm not really going to give too much input of whether or not I think it's going to go up and break through this flag that I pointed out, this flag range, the black dotted trend or dash trend lines, or continue to go to the downside here. But generally at this point, I don't think that it necessarily needs to go down, but I also don't think it necessarily needs to go up. I think it's pretty much in the spot to do whatever it wants in this point. And I mean, whether or not it goes down or it goes up from this point, overall, I still don't think that anything is going to be super detrimental in the big picture of things. But as I was saying, that was pretty much all that I wanted to go over in this video. So hopefully you guys enjoyed. Hopefully you're able to take away some things from this video to learn, to educate yourself, to apply to your own trading schemes. Perhaps you'll end up using some of these indicators I went over in order to help yourself, as again, that's what this channel is for. It's not financial advice. I'm just here to pass my time, basically, and try to create dialogue and just discussion, because I like to have dialogue and discussion. But everything being said, hope you all enjoyed the video and hope you all have a blessed day.